Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, Wall Street kicking off a new month after gains across the board in August. U.S. stock futures currently pointing to a lower open as investors return from a long holiday weekend. September, historically the worst month for stocks, and the trend has gotten worse in recent years. Over the past 5 years, the S&P 500 has averaged a 4.2% drop in September. So investors are seeking safety. Gold prices briefly hitting a new record high. It's renewed uncertainty over trade and tariffs weighing on investors this morning. A federal appeals court striking down President Trump's tariffs in a ruling late Friday, saying the president went too far in using his emergency powers to implement his signature trade policy. The ruling sets the stage for this case to head to the Supreme Court. And a busy morning for some of America's biggest food companies. Kraft Heinz announcing it will split into two separate companies after more than 10 years as a combined company. One company will focus on sauces, spreads, and seasonings. The other will sell staples in North America. And PepsiCo is the target of an activist investor yet again. This time it's Elliott Management. The hedge fund has built a $4 billion position in the beverage and snack giant, making it one of the company's largest investors. Let's get a check-in on stock futures right now. We are seeing them under pressure across the board, in particular large cap tech. After the big up month last month, we are seeing some concerns creep back in about both concentration risk as well as the valuations where they are right now. Forward price to earnings multiples on the S&P 500, the highest that they've been in quite some time. So we see right now the NASDAQ 100 futures pointing to a lower open of 1.6%, the S&P pointing to a drop of 1.2%, and the Dow indicating a lower open of about 1%. Let's dig now more into our top stories of the day. Futures falling to start the month as investors look ahead to the August jobs report out on Friday. And Kraft Heinz planning a split as activist investor Elliott Management pushes for changes at PepsiCo. Plus, President Trump vowing to take the trade fight to the Supreme Court after the U.S. appeals court ruled that most of Trump's tariffs are illegal. Joining me now, senior markets reporter Inez Ferre, senior reporter Brooke DePalma live at the NASDAQ, and Fed correspondent Jennifer Schonberger. Brooke, I'm going to start with you this morning and on these fresh headlines that we are getting on the big food companies. A lot of movement going on there, sort of remaking, unmaking some of the big food companies. Let's start with Kraft Heinz and the split.
Yeah, absolutely. What we're hearing from Kraft Heinz this morning is that the company intends to form two separate companies, and that includes Global Taste Elevation Co. and North America Grocery Co. Now, it's worth noting that they say that this transaction will close until the end of 2026, but that Global Taste Elevation Co. really includes those crown jewels. Think Heinz, think Philadelphia, think Kraft Mac and Cheese. The company says that those bring in $15.4 billion in net sales, according to 2024 reports. Now, approximately 75% of those net sales includes things like seasonings, sauces, and spreads. And it's worth noting, too, that these are really the crown jewels really driving the growth. But North America Grocery Co., that will include Oscar Mayer, Kraft Singles, and Lunchables. The current CEO, Carlos Abrams-Rivera, he will lead North America Grocery Co., and they're currently looking for another executive to lead the other Global Taste Elevation Co. But really, this is nothing new. We've heard of so many mega breakups in big food, including that latest announcement from Keurig Dr. Pepper, and of course, just a few years ago, and now the transactions have come to a close this year, includes that mega breakup with Kellogg's between Kellanova and WK Kellogg, both of which got bought out for major price tags. So lots of breakups right now in big food.
Well, and could Pepsi be heading in that direction?
Yeah, well, Elliott Investment Management certainly weighing on PepsiCo this morning and PepsiCo's shares. The company, or rather the hedge fund, really calling out in a presentation that just dropped about 45 minutes ago, saying that PepsiCo needs to increase strategic focus, re-accelerate growth, and enhance margins, returning to what it calls could be a best-in-class financial profile. They went on to say that their weakness in North America has really weighed on the total company organic growth and earnings. And we know that shares of PepsiCo have have been under pressure. They're down more than 14% or nearly 14% year over year. Elliott calling the company, quote unquote, undervalued. And it's worth noting that Elliott Investment Management have come for food before. This is the hedge fund that came for Starbucks last August of 2024. And almost immediately, we saw that flip in the CEO suite to name Brian Nichols CEO.
Well, and speaking of flips in the CEO suite, the third big food story this morning is an ouster at the top of Nestlé, Brooke. What's going on there?
Yeah, well, the current CEO, Laurent Frégé, he has worked at Nestlé since 1986, and he rose to the ranks to become CEO just last August. Now, Laurent is out based upon what the board is saying, an investigation into a relationship with a subordinate employee, and they've already named a new CEO. The new CEO is Philippe Novotel. He was named CEO immediately over the weekend. Now, he has led the coffee strategic business unit. So it's important to note there as Nestlé faces pressure over cocoa and coffee production and increased prices there. But also he has worked at Nestlé since 2001. But it's worth noting that Laurent joins the likes of Kohl's CEO, former CEO there, Ashley Buchanan, also former Kroger CEO. And this just goes to show that in this sort of environment where there are so many headwinds already up against these companies, they are not taking any internal relationships, any fall shorts very gently, rather immediately ousted this Nestle CEO, once again joining the likes of Kohl's and Kroger earlier this year as well.
Well, Brooke, from zooming in on those food companies, I want to zoom out now and look at more of the macro picture. I mean, for that, we start with Jennifer here. And on the future of the Fed, we are seeing further developments here in this push on the part of President Trump to try to oust Fed Governor Lisa Cook. What are you hearing this morning, Jen?
Good morning, Julie, and welcome back. It's great to see you. This week is going to be another test for Federal Reserve Bank independence. We are awaiting supplemental arguments that are supposed to be filed today by lawyers, both from the Department of Justice and Lisa Cook's lawyer, Abby Lowell. For the U.S. District Court here in Washington. Those oral arguments, that hearing ended on Friday midday with no ruling from Judge Cobb. And so all investors are anxiously awaiting what will happen there. If Cook ends up winning, I would expect to see the Trump administration appeal that. That would likely go to the Supreme Court. So that's test one this week. And we did see hundreds of economists write a letter in support of Lisa Cook this morning. So support from the economic community for central bank independence there. And the second test I'm looking for this week is Stephen Miron, who's President Trump's nominee to replace Federal Reserve Governor Adriana Kugler. Remember her? She stepped down earlier in August. He is going to have his confirmation hearing on Thursday, and I am going to be watching what Republicans ask Miron, because I think that will be another test of Federal Reserve Bank independence. Certainly the Democrats are going to push on that front, but I think some of the Republicans are going to have to walk a tightrope there. I do expect that he will get confirmed out of committee, and we could see a confirmation vote out of committee as soon as next week, probably Wednesday or Thursday. That's typically what we've seen in terms of the timetable this go around through Congress, which would then lead to the full floor vote, putting him in place probably just in time for the FOMC meeting on September 16th and 17th.
Which was not the initial expectation. So that's right. An interesting and different dynamic. Speaking of tests, by the way, President Trump's tariffs facing an increasing number of tests. And so we're looking for further developments on that front.
That's right. A appeals court upholding a lower court's decision late Friday that the tariffs that he issued on April 2nd are deemed illegal under IEEPA. The court, though, did leave some breathing room for the Trump administration to appeal that ruling, those tariffs remaining in place until October for the president to appeal that to the Supreme Court. Remember, this applies to the Liberation Day tariffs, so that court challenge does not affect the foreign steel tariffs, aluminum, autos, semis. Those were all done under different sections, 301 and 232. I would expect the administration to be troubleshooting just in case, though, to look at issuing these tariffs under different authorities, perhaps like Section 201. That's something that White House Press Secretary Caroline Leavitt has said in the past, depending on how the Supreme Court could rule on these tariffs. But for now, business as usual.
Business as usual, but a lot of questions still, as there have been. And Inez, let's get to you because we're watching markets here, and the backdrop of all of this news we've been discussing is that we've got a pretty significant sell-off this morning.
Yeah, we do. And we have to keep in mind that we are going into a seasonally weak month. So September tends to be the weakest month for stocks. The B of A saying that going back to 1927, in September, you saw stocks falling 56% of the time by an average of a little more than 1%. So seasonally, the wind is not on its back, so to speak, for these markets. Also, taking a look at September and October in terms of the VIX, in terms of volatility, those tend to be months where the VIX is higher. And part of the issue, part of the reason why you tend to see some of the selling in September happening or selling pressures is because you've got pension funds, mutual funds that are rebalancing their portfolio at the end of the quarter. And so you tend to see the seasonal volatility when it comes to stocks. And there could be catalysts this month as well. I mean, you've got the jobs report coming in on Friday, you've got inflation data next week, and then, of course, you also have the Fed meeting. So you could see the markets moving on those catalysts as well.
And on, I guess, the inverse of all of this risk aversion that we're seeing at the moment is that we're seeing some renewed interest in the precious metals, right, Inez?
Yeah, so we had seen gold sort of in a consolidation period. Well, now it appears to be breaking out above 3,500 per ounce on the spot market. So that is testing its April highs. Gold is about 30% higher year to date. It is one of the best performing precious metals or commodities in the market. You also have silver that is at 14-year highs. You have silver above $40 an ounce. Look, as far as gold is concerned, the street has been bullish on gold. You are seeing that the expectation that the Fed is going to lower rates. That is very bullish for gold prices. You also have geopolitical issues. You have the tariff issues. So you have a lot going for gold, and just the fact that it has been rallying so much. And of course, the biggest central structural demand, so to speak, that has been happening over the last couple of years, which is not expected to change, is central bank purchases of gold as well.
Yes, that's been something that's been that support for the market for a while now. Inez, Brooke, Jennifer, thank you so much. Appreciate it. Coming up, we're going to catch you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now, time for some of today's trending tickers. We are watching Constellation Brands, Novo Nordisk, and Klarna. First up, Constellation Brands, the beverage alcohol company, updating its fiscal 2026 outlook. It lowered its earnings per share guidance. It forecasts a greater decline in enterprise organic net sales. The company noting that the challenging macro environment has dampened consumer demand and led to more volatile purchasing behavior since the first quarter. In addition, high-end beer buy rates decelerated sequentially as both trip frequency and spend per trip decline. Next up, we got Novo Nordisk, the company reporting trial data for its weight loss drug Wegovy. The data showing a reduction in the risk for heart attack, stroke, and death from any cause while on treatment in people with overweight or obesity and cardiovascular disease. The company noting this as a real-world study instead of randomized controlled trials. And we've got Klarna, the fintech company, revealing details for its initial public offering, putting pressure on rival Affirm. Klarna is aiming to raise as much as $1.27 billion in its IPO. The company will list its shares on the New York Stock Exchange under the symbol KLAR. It's offering 5.6 million ordinary shares, and selling shareholders are offering an additional 28.8 million shares. Remember, the Klarna IPO has been delayed several times. We're not still sure of the exact timing of when it will debut. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, September tends to be the worst performing month for stocks, with the S&P 500 typically ending the month with a loss of about 0.7%. For more on how investors can navigate this period, Ken Mahoney's joining us, Mahoney Asset Management CEO. Ken, good to see you. So we tend to see September as negative. We're certainly starting off in that direction here. So do you think that that we are going to see sort of a typical September here? Are there some pressures on stocks this month?
There is. Julie, feels like the perfect storm since Friday. So, we had calm volatility index, then Friday night was a blow to the tariffs. Over the weekend, we saw China, Russia, India get together, trade partners. That's not a good look. And we are coming in, flip the page, first trading day, September, where we find the volatility index up, 18, 19%, trading around 19. So definitely those calm waters we had in July and August have now given way to a lot of things, as you mentioned, unemployment report on Friday. Then we have the PPI, the CPI, and the Fed meeting. So we have a lot going in September, and it's going to live up to its lane. I mean, this is a tough start. I think you said earlier, the last 5 years, the S&P 500 was lower by 4%. So we're down 2% already. Maybe we're halfway there, and it's the first trading day of the year.
Yeah, I guess over the longer term, the declines are less, but the last 5 years in particular, indeed, have been tough in September for the S&P 500. So given all of that, we've seen, for example, a bid in gold this morning, Ken. I wonder if this is a time for investors to get more defensive here, or do you think it's just going to be sort of a short-term hiccup?
I like to think it's a short-term hiccup. Look, these are pretty big headlines to digest all at once. It's like the perfect storm, right? Hit it 3 different sides, the George Clooney movie. And, but yeah, again, we'd like to buy the best, like NVIDIA on the pullback, Microsoft on the pullback, Apple on the pullback, the big, hyperscalers. And I still think AI spend and the hyperscalers and what they're spending will still be the excitement around the market. So definitely we're dealing with some geopolitical issues right now at our doorstep here in September to start the month of September. But there's still great opportunity. I think we're still in the 3rd or 4th inning of this kind of great spend. But again, it's going to be tested, of course, in the coming weeks with this being September.
Ken, what about the Fed meeting that we are awaiting in September? There is a very high percentage chance being priced into markets, at least right now, that there will be a rate cut at that meeting. What is that going to mean for markets if indeed it does happen?
Right. So it's usually a campaign. It's not just one and done. They'll eventually maybe cut again in October, November. I mean, there are some economists kind of, Julie, really shaking their head and say, wait a second, we just came off a revision of GDP, 3.3% last week. The Atlanta Fed was really good at predicting. They had this quarter that we're in right now around 3.5%, and they're cutting rates. But it's really difficult, for the Fed. They've been kind of like deer in the headlights. This is difficult. I mean, you have a dual mandate that says inflation and a jobs market. And I think they're paying a lot more attention now to the jobs market after the hideous number we had last month, which showed job creation a lot less than expected, revisions from May and June, and here we are. So with the Fed in the deer lights, now they're saying, no, I think we'll take this side of the ship, because if this really gets unraveled, that's a harder place to kind of dig out from. So I think the Fed's making the right decision, but most economists will sit back and say, wait a second, we're running a 3.5% GDP. Why are we rushing to Fed cuts? But here we are.
Well, and we're going to talk to some people later on in the show who are suggesting that maybe the tariff inflation is still coming, right? That we're seeing small signs of it now, and that it will show up more later. Then again, you have now renewed tariff uncertainty because of these various court rulings. So we keep waiting for the environment to sort of get more certain, but I guess we should give up on that.
Too many cross. Yeah. And that's why sometimes we come back to the AI. Like, what's exciting? Where's the risk on? Now today, everything is risk off, including NVIDIA. But if you think about the AI being, let's say, Monopoly board, right, and the Park Place and Boardwalk are your NVIDIA and Microsoft. That gets kind of exciting. I mean, again, there are the picks and shovels, much like the Monopoly board game, the picks and shovels. So there's still, when we get these pullbacks, this market's gonna be more about tactical, probably between now and the end of the year. A tactical meaning putting a bid below the market, good to cancel. Hopefully you get filled. keep your core position, but you could trade around it, these opportunities that come up because of some of the geopolitical concerns that are popping up. But if you really do think of this as the AI monopoly board, and you want the picks and shovels, you should be looking at Microsoft and NVIDIA, even though we have to deal with a lot of these headline risks that's happening at the same time.
Right, but those two have been winners this year. So
winners.
Yes, exactly. Ken, good to see you. Thank you.